Good morning, everyone. John471 here to discuss the S&P 500. Today is Wednesday, May 14th, 2025. Allow me to read our disclaimer. Derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. Let's move on to our news. Not really a lot on the calendar today. Yesterday we had CPI. Tomorrow we get PPI, jobless claims, retail sales, and Jerome Powell. But today, not really much at all. We have Jefferson on the calendar speaking. It says 8:10 here Eastern. However, I do see it at 9:10 on another calendar, so I'm not sure what which discrepancy is correct. We also at 10:30 have the petroleum status report, which will be important for those that trade crude, which is becoming a more interesting trade if the S&Ps just continue to rally the way they are. But regardless, that's what we have. Pretty light on the news today, pretty light on the expected news, that is. Let's move on to our charts. Okay, here we are on our chart of the S&P 500, full session, daily bars. Usually I have the weekly profiles. Let's put those up quickly. There they are. So just continuing our narrative here versus what we've been talking about. The big thing with the rally was recovering the March range. That was a big step to moving from the bottom. We were able to do that, and we were able to take the March VPOC, which is right here. We then were able to continue and take the next targets, which were the prior month's highs right here. And I had mentioned that the 5821s were really the key target, the 5821s, the MCV POC going back very far. And what we ended up doing was just gapping above them, gapping above that area, which often happens when it's like a very clear target a lot of people are looking at. We don't actually hit it in the way that you think we would. But anyway, in this situation, we've gapped above it and we're holding, we've held the 5821 area bid as we continue to grind higher. So for me, the next key target, now that we're like really starting to show some ability to move higher, we've moved back into this area. I'll remove these profiles. We've moved back into this kind of range of trading up here. We had this area was a really significant double bottom. I talked about it for a long time. A lot of people probably heard me talk about it for a while. Similar to the way that I talked about like this area, we see these big higher time frame areas and they play out slowly. But anyway, so now we've recovered this range as of now, and as long as we continue to hold this range, this is right around the 5900s, then the next higher time frame target for me will be the 6,000 mark, it corresponds with a value low, this HVN, and it's a very psychological number. So for me, that's the next big target on this time frame if we continue higher. And if we start to go lower, then I will be looking at the prior day's lows as a key area since we're one time framing. Let's go to a lower time frame chart and discuss that. Okay, here we are on our intraday chart. The lavender areas are the overnight trade. And this is really showing our entire week so far. We opened, Sunday reopen, opened down here, rallied on the reopen. It was pretty much driven on, expectations of us getting a deal with China, which, we got the pause, the 90-day pause. So market likes that. We rallied above. Here's the 5821s I talked about right here. We basically opened below them, rallied above them, held on a retest, and have subsequently just began another round of trending higher, looking for sellers, this time above the 21s. So, Tuesday, so that's what we did Monday. Very clear double distribution in the Monday profile, super clear. The retest of the LVN happened overnight, so we didn't get a chance to trade it, but that's kind of what we look for. If we think continuation is a thing that could happen, that's the area that I look to be interested in executing. Got it overnight, continued higher, and then yesterday what we had was essentially a P-shaped profile after the CPI where we opened lower, pushed higher, left a stem and a balanced area up here with some single prints. Our CPI SOC was not retested during RTH. That's down here, just 3 ticks below yesterday's RTH low. So this area, yesterday's low, there's a lot of attention there because there's a lot of a couple targets if we start to fall lower, if we start to retrace through this stem. But regardless, today we're going to begin with bullish ideas just because that is the higher time frame theme that we're going. So we're just going to go with that. Doesn't mean that's what's going to happen. It's just one possibility. But we'll go over the most bullish idea. And the most bullish idea for me, you see we have these single prints here left from yesterday. We're kind of pressing into them overnight. We have moved the overnight VPOC down a little bit lower, but we seem to be banging into some support. So the most bullish idea would be if this support just holds. And what would that look like? Well, what it would probably look like is just as we see here, we have this bit of a zipper. We're trying to hold the overnight low. If we're just able to hold these singles and just push higher and take the overnight high, as long as we don't reject the overnight high, I would be open to continue to test yesterday's high, the 27s, and get into these single prints left from March, which would be the initial target for the bullishness. That would be like phase 1 of the bullish situation where we hold the expected area, push, and take the next target. At this point, taking yesterday's high, there would be 2 possibilities. The first possibility would be we see sellers, we fall back, but we hold this support and we just begin a continuation of this grinding situation we see. If this is a situation, I would just go zone to zone, try to ideally find a nice lean for the long and just go zone to zone for this action. But however, I've talked a lot about this action, how it kind of starts to erode risk reward, and we would always be aware of the possibility that one of these little pushes we might get this high, see a lot of sellers come in, try to get that next rally and then not get the high, in which case that would signify that we're starting to move more into balance, and I would probably go hands off until I see what's going on. But that would be, so the most bullish idea would be holding this area, just pushing higher, starting to take targets. That would be the most bullish idea. If we start to fail to get the most recent highs, then that would portend balance for me. I'll also, be aware we could just take this high and impulse higher through this unauctioned area up to the 5950s, which would be the key target for today, and just hold and reprice and just have a balanced or choppy day around the 5950s, which is a strong possibility. But regardless, however we get there, if we're able to get to the 5950s and continue, like I said, I would just be going zone to zone looking for the millennium figure as the next key target. So those are bullish ideas. What else could happen? Well, I sort of alluded to it. We could take this high, find sellers, get pushed down. As long as we hold above these singles, to me, that would just be balance that would eventually be most likely to resolve higher. However, if we start to push into these singles, we take this high, we fall back, we push into these singles, and all of a sudden we start to see resistance on attempts back into this distribution left from yesterday, in which case I would be open to a grind lower into yesterday's unauctioned areas. What would be the key targets? If we start to grind, well, the big one would obviously be this whole area, this whole 60 to 65 region, which is yesterday's low, and the CPI SOC. Now be aware, because in my opinion, the bullish theme is so strong. This is really the support we'd be reacting to. Everything that was put in, let's do it like this. Really, this whole area, I'll just color it. Oh, it's not a good color. This whole area, this is all the support. It can just be a messy line. All of this trading is just a messy area of trade that the buyers have shown that they control. Excuse me. So that would be the support that I would be looking at. And if we take yesterday's low, strong possibility we see a bit of a zipper, attempt, failure, and continuation. We call that a lick check. So that's a very strong possibility to see at yesterday's low if we test it. And that would just kind of continue a sort of larger sort of trend higher where we get the pullback to the expected area, still kind of within the trend, and then we can just bounce back up higher and either chop or continue the trajectory. That would be the key area to be aware of on pullbacks. What happens if we lose this area? If we lose this area, things could get interesting. The key target on, if we actually start to extend prices away from this area, I would expect it to be pretty choppy, but the obvious key target is this 58.21s down to the gap zone. So this whole 20-point range is the next area. It's one vola down. If we lose the 60s, then I'm looking for O's to 20s, this whole area. And this is another area where, again, based on the bullishness, we could see a lick check out of this area, depending on the context. But if we somehow don't, I'm not really expecting to see this today, although it is a distinct possibility that we see this today. I'm not expecting it. It's a distinct possibility. But if we start to get into this 21s, we lose it, we get into the O's, then you guessed it, zone to zone, trying to close this gap. We have plenty of targets within this very wide gap. We have Century. We have these single prints left from a long time ago. We have the 75 handle. We have gap mid. We have the 5750s. So there, if we start to get into this area and you get on a short, there are plenty of targets to scale at, and the ultimate target would be gap close. Really, with prior week's high as a very key target ahead of gap close. But that's what I got for you today. I'm going to wrap it up here. We're at 12 minutes, so it's around the time that we want to be. Key things to recognize: upward bias supported by the higher time frames. So for me, I'm leading with that bias, but I'm aware of areas that we may pull back to, most specifically yesterday's low, key area. If we pull back to there, I am open to the reversion long. If we don't get the reversion long out of there and we start to lose this area, then we know that the 21s to O's are the next key. If we lose that area, then we're just looking at the auction targets within the gap, with the gap close, prior week's high as the key areas. Pushing above, we have plenty of targets here. This unauctioned area, these single prints, then our 50s. If we can get through the 50s, then we're just looking at the potential for the millennium figure at some point, maybe this week. That's what I got. I hope everyone's having a great morning. I hope your great morning continues. I hope that you push the like button and help us get to 10,000 subscribers, because that's big psychological resistance, but we need to bust through it, squeeze those shorts, and get to the 10,000 bid. Let's do it, guys. Aside from that, Wednesday, let's get out there, clock those ticks, and let's do something today that really improves our trading as far as our processing is concerned. Let's do that, guys. All right, everybody. Hope you're having a great morning. Hope your great morning continues. I'll see you tomorrow. Ciao.